we have the most important European Central Bank also releasing the interest rate decision. This would be probably the main event for this week, along with the US GDP numbers, the growth rate numbers that we are coming to expect. But overall, the trend still remains bearish for gold. Morning, folks, and welcome to a brand new episode of FinMet Mondays. Sunil, our trend prediction for last week turned out to be bang on.
Your technical analysis and levels were perfect. You said that we should go short above 2055 with a stop loss at 72 and take profit at 2008, and we literally came down to 2008 and moved up towards to 2020. So you were absolutely spot on. I'm curious to know what you think is going to happen this week, so please tell us.
Let's jump right into it then. We were waiting for this big red candle last week, which we see here on the 16th of Jan. And followed by that, we came right down to 2008 and then we saw a pullback, right? So the trend for this week looks very similar. The outlook remains fundamentally the same. I still maintain that the outlook for gold in the short term remains bearish. On the technicals, you see that from last week, now there has been a gradual movement lower in the MACD as well. You're seeing that the MACD line is now going to move into the bearish zone, and this is a sign of concern. This is a sign that there's been enough time that bulls have had to really pick up the price action and really drive it higher, but the markets have just not been responding and not been getting any traction. In terms of where we expect the markets to kind of come back, so the first support, which first needs to be broken, is the 2008 major support. This is the area where gold has bounced back from. Following that, right $30 below this, we have the first major support at 1970. I must include that there is an intermediate support somewhere around the 1986 in between these two green lines right here. But these would be the three main areas to watch out for: 2008, 1986, and 1970. I had mentioned in December, we had spoken about the January effect, and we'd spoken about how in January, we typically tend to see markets are performing much better in gold as compared to any of the other months. And the reasons I had pointed out was portfolio rebalancing, seasonal weakness in yields, and physical restocking of gold in China ahead of Lunar New Year. I must mention that some of these are reasons why gold has been able to sustain above 2000, even though it has not been able to hit those highs that you were expecting. So this is actually what has happened, which is keeping gold above 2000. And it's very important to note, in addition to geopolitical tensions, these are all the flux of reasons we are seeing for gold to be able to hold above 2000. The focus should also be on the US dollar. You see that the US dollar had hit these lows right here around the 100, and now it has just been climbing in contrast. As we've seen upticks in US dollar, we've seen stagnation in gold, and this inverse correlation is going to continue to play out. Lastly, we have three central banks releasing their economic interest rate decisions. We have the Bank of Japan releasing the quarterly outlook report. We have the Bank of Canada, their interest rate decision on Wednesday. And finally, we have the most important European Central Bank also releasing the interest rate decision. This would be probably the main event for this week, along with the US GDP numbers, the growth rate numbers that we are coming to expect. But overall, the trend still remains bearish for gold, and that's basically the essence of what we would like our viewers to take in this week.
Yeah, I mean, just to reiterate what you said, over the last few days, I've been talking to major physical players around the Asian markets, and you're right, the physical market are basically underpinning the gold price right now. The demand in China ahead of the Chinese New Year is very strong. The premiums locally are around $40. Even premiums in Hong Kong are around $3 or $4. So demand is actually very good right now. Even in Thailand, similarly, demand is good. Even in India, gold demand seems to be quite decent. So overall, that's underpinning the gold price. But the general sort of investment mood is bearish, and you can start seeing short positions building up on the CME. So I agree with you. I think we're going to see some amount of drift downwards over the coming weeks, maybe not maybe this week.
Definitely, definitely. Well, thanks, Sunil. Thank you for your valuable input. Let's see how the markets play out this week as well. But till then, thank you so much and goodbye.